you will notice that cash and cash equivalents at the end of September tally with both the cash balance and bank balance, but because we don't keep cash at hand, all the bank balances actually in the bank. So these are just the accounting policies that the terms of the association that we have, and this is how to do with our fixed assets. And we agree that we also do depreciate the assets. So you will notice that we have furniture and fittings. These are things that we have at the secretariat, and that's the total. The first line there is at cost, how much you actually, but at the end of every year we are supposed to be depreciating it. So let's go down a bit. Accumulated depreciation comes to about 3.7, and we have a net book value as at December 21 of 1.4. So that's net book value is what is stated on the statement of financial position that I talked about earlier. Now, the bank balances that is talk about 5.8 is we have two major banks, Stanbic and Global Bank. So as at the end of that period, 515, I think you will notice that Stanbic has been static. So because there is no transactions that are there, because of the service fund, most of our transactions are routed through Global. That's why that money is actually still remain the same thing. Then Global Bank, of course, there is a little drop, but we can explain how we arrive at that cash flow balance. So the next one is also reconciling the accumulated fund that we talk about. That is what was the beginning of the accumulated fund, what happened that year, and at the end of the day we have the balance carried for which is the closing balance. The next one was showing us paying for an accrual, that is 300,000 audit fee that we talk about. You see that in the notes is properly fixed. Let's go that way. Now the next one is to give us a breakdown of the income that we have. Because of that short period, most of us will notice that income annually usually pay when we are getting close to AGM, because people also want to pay to actually qualify. So as at that September, because AGM was supposed to be November, as at September, only 55,000 annually have been received against 5.6 in the previous year. Previous year was an election year. An election year, naturally the thing usually goes. And in terms of donation for prize giving, we have about 1.8 million. Then for DCB award, about 1.3 million against 1.6 million. Donation for projects, new for that period was 18.4. As at that period, that was the period of the former ESCO. We did a lot of projects, and that was like that amount. But you see that as you are still under income, under project, there are also project expenses, which you can actually see later. The donation of 20K was for a teacher. I think the teacher we lost, I think on the baby. The use of secretarial 40,000 against 70, advert 40,000, and muffler that month came in the previous year or nothing. So that's how we got the total of 53 million. So this does the cash flow shown again. Number of employees, there's a staff that will pay monthly salary used to be 10,000, but I think it's now 15,000. You see it when we get to the breakdown of expenses. Let's go down. The next one is now breaking those things down. Income is 3,340 that we talk about, and financial and personal charges, that's about 230,000. That's the summation of the audit fee and the bank charges, because as a doing transaction, there are some COT or those things that the bank will take. Then the project expenses is 319. Along the line, I think we have to spend this money on fence. And so there's over fence, something happened that we have to reduce it. Then in terms of admin expenses, 3.8 against 4.6 million. Then for depreciation of our assets, you will notice that the increase is because of the additional things that came in within that period. And that's how we arrive at the deficit of about 1.732 that we have. Let's go down to the breakdown of all the expenses that we actually have. Like I said earlier, the 230 was a breakdown of bank charges and audit and accountancy fee. That's the 230. You notice that yes, there's a little drop in the bank charges, which is something positive. Of course, in function of the turnover, the number of money that pass through that account. In terms of the project, you will also notice that that 3 SSC fence, that's the painting, that's one of the expenses that was incurred that I talked about earlier. And in terms of project expense, in the previous year, we have a lot, there's dormitory, there's SSC hosted, there's Hall of Fame. So those are the things that make that project expenses for that year to be good. So coming to the salary and other benefits, like I said, the person that we have, he earns 10,000 monthly. Ordinarily that will have, because we are doing 10 months, and we also give him end of the year gifts. Also, you see that in the previous period it was 120, but now it's 130, because along the line the salary was actually increased. So in terms of for students, I mean, there was a great initiative that was started that we encourage members, spirited members, to donate money towards the prize giving day, and a lot of people have done it. And so for that year, we were able to get about 1,840 from a lot of our members. 1,840,000 naira. And this 951 actually relates to 2021, because at the end of the day, since we have a cutoff as of September now, that thing has not happened. So that's why the 951 is actually part of the expense of AGM of 2021. And in terms of secretarial expenses, just 72,290. And that's how we arrive at the 3.8 million. That's the total administrative expenses, depreciation 700. And that's how we got the total of that amount of 5,073,000 again 23 million that we have in the previous year. And the last one is just showing us 5-year financial summary, giving us a snapshot of for the last 5 years how have we fared, starting from 2018 to 2022, how the current assets have been growing or reducing. The total asset, the accumulated fund, the liabilities that we have, so that it gives us a fair idea of how we're actually faring in the association. So I think on that note, that'll be my presentation on 2022 accounts. I don't know whether I should go to 2023 before we ask questions, or we can just go ahead. Okay, so I would like to go ahead with 2023 accounts so that we can take the questions together. Like I mentioned that good enough, we have sent this account ahead so that it's just formality that we are doing this, so that it has to be properly presented. And this account, as I've been mentioned, is audited, and the external auditors that audited the account are also here seated so that to make any clarification. Can we scroll down? Now, because we have changed the year into 2020 to September, this one is also as of September, so we will be comparing apple with apple, September 2022 and September 2023. I'm happy to inform us that for 2023, we improved. I mean, in the previous year, it was just a deficit of 1.732, but for this year, it's a surplus of 641 million. And when you see the income, 641,038. And when you look at the income aspect also, it's also an improvement from 3 million to about 9 million. So let's go down to the breakdown. In terms of statement of financial position, as of September, when you also compare the two periods, you will notice that our total assets have actually grown. It was 6.5 as at 2022, now 7.2 as at 2023. Now, looking at the breakdown, you will observe that property, plant, and equipment, I mean, there was a major stop there. It was from 744 to 1.336. The roof for the secretariat has to be, you have to spend some money on the roofing, and those things are actually what we capitalize and make that figure to actually increase. The next item you see here is when you see intangible assets. It has to do with the website. I mean, Escobar now has a website. You will notice that last year there was nothing on that line, and the website actually cost us about 1.5 million. Now, because of accounting principle, we have to depreciate. So while you are saying 1,350, it's like 150,000 have been depreciated from it at the rate of 10%, as I mentioned the accounting policy earlier. So you will be seeing that every year that balance will be changing, except there's an additional, maybe there's additions, or maybe there are new things that are bought. Even though we noted that the cash reduced a bit, what caused that reduction in cash are those capital expenditure that we did, which is the website of 1.5 million and the roofing that we actually that we repaired. So at the end of the day, but the overall total asset increased from 6.5 million, 6555 to 811 to 7,296,849. And also, good enough, accumulated fund, you will also notice that at the end of the period, it also increased from 6.5, 6555, 811 to 7296,849. And I think our target is to make sure that every year in, year out, we have a positive, I mean, we having surplus, rather than, I think, one of the days of having deficit account. So can we move to the next? So this one is also showing us, even though it's modest, I mean, the surplus for the year 2023, the 641,038, means that we're able to manage debt within what we have. Will this pay more than what the income that we actually made? So let's go down to see the breakdown. Let's go down. Let's go down. Okay, so this cash flow statement is also showing us how did we arrive at the ending balance of the cash. You know, I said it was 6.6, it reduced to 5.8. In terms of operating activity, we have a surplus. In terms of investing activity, that's in total, that's about 3.2 million. When you net it off, that's what gives us about negative of 1.2. That is, we spent, in terms of operation, we spent more than what actually came in from operation. And so that's the net decrease in the cash. And at the end of the day, that's how we arrive at our ending cash balance, which initially was 5.8, but we now add 4.64610 at the end of that year. And in terms of the balance, this is the balance compared to the previous year 2022 account. Can we move to next page, please? This is accounting policy, which, I mean, it doesn't, it's usually just like that. And this is our fixed assets, I mean, that we have. You know, I talk about there was addition during the year, that's about 1.7, that increased furniture and fittings to 4.5. Those other ones, there was no addition. So at the end of the day, the total balance at the end of that period was 6.2 million 49. In terms of depreciation, every year you need to do a charge. So with the accumulated depreciation comes to about 4.9 million, and that's how we arrive at 7. At the beginning 744, at the end of the year it was 1336 in terms of net book value, because assets are usually stated as net book value. Now the next line is to show us intangible assets. You will notice that we did not add it to the fixed assets because there's a provision. What we do for intangible assets, we actually amortize, we don't depreciate, because they are not tangible assets, they are intangible. And what to put under that intangible is our website, which I mentioned earlier, it costs 1.5 million, but on the statement of financial position, what you are seeing there is 1,350 because of the depreciation that have been a charge that have actually been done for that period. Can we move? That's the, sorry, before we move, you will see chart for the year 150, just like I mentioned, and as of September, that's the 1350 that we have. So the bank balances, you will notice that, like we said, Stanbic, we hardly use it now. We have been using, maybe part of what we are going to do at ESCO level. Perhaps we may have to move the balance to Globus, but it's still left there. You will notice that there's a little drop. Those are bank charges. You know, banks, whether you do transaction or you don't do, for certain period they will pass on entries into the account and they become, so, but that difference just about 2,000, which is not material. In terms of global bank, we have our 4,097,000, and that's how we got the total of 4,610,818 as against 5.8 million that we had earlier. And we also try to do the breakdown of the accumulated fund. And you will notice that in 2022, it will, because we had a deficit of 1.7, accumulated fund actually reduced from 7,988 to 6.6255. But when we come to 2023, it actually, because of the positive, the surplus that we had, it increased from 6,255, which was the beginning, ending, closing balance of last year. It now increased to 6,896, which is also something very positive. You will also notice that under payables and accrual, that 300,000 as of last year, we said at the end of the day, auditor, you know what we are paying, what we should pay is that I will charge to the account because this is payable. It's different from what they actually expect. So the payable now we are owing because along the year we have paid the balance for that 100K I talked about. Now we are owing the auditor for 2 years now, which is for 2022 and 2023, and that's why we arrive at the 400,000 that is there. Let's move to the next page. In terms of the breakdown of the income, annual due, I think we started waking up, even though so many people have still not paid. I believe we are going to go on a massive drive. The total income for 2023 moved from 3.3 million to about 9 million, and 1.2 million in terms of annual due, in an improvement from 55. Even the donation and prize giving day, it was 1.8, 1885, 500 previous year. Current year it moved to 3 million, that's close to double. And I think one of the things that I've done is to encourage more people to actually sponsor that say, okay, best students in mathematics in certain area. So you will notice something that under the DCB award, we did not. Please can we move? Okay, so under the DCB award, you will notice that for this year, the DCB award was DCB award for this year from the account. So it's going to be accounted together with the fundraising event, which as we get it, so that it's very clear. That's why we're having a nil here compared to 1.3 million that we got in the previous year. Now, under donation for welfare for members, I'm sure during the president's address, he mentioned our Henry Wosu, one of the former SF Cuba member that had a medical challenge. A lot of, I think I must commend a lot of the members that actually wake up and actually donated. But it's a function, what we have made together with that is not, that donation is not for him alone. We also have members that are donating for our principal, Mr. Kuti. So what we have here is the summation of the two, 4484-231. Because we don't want to spend money we don't have. So the way we have done the account is like a project. Money that is meant for a particular thing, we can't just spend it anyhow for another one. Then in terms of use of secretariat, that one was 70,000 as opposed to 40,000 that we have. In terms of adverts, there was no special advert in 2023. And in terms of muffler income, about 144 million actually came. 144,000. I like million. Okay, no, if it's $1 million, okay, so in the note again, how did you come about the surplus? We also done a breakdown of the cash flow from operation from the surplus of 641, and we also have to add back, to be able to know how much we actually generated from operation. That's the 2 million which we have actually explained. Number of employees still remain one. It's only one staff that is being paid, and I've noted that along the period the salary has been increased. So in this area, we now also try to break down the income, try to separate financial from operational charges, 220 against 230, project expenses 70 against 319, and admin expenses it increased 6799561 against 3823, and depreciation also increased because of the reason I mentioned. At the end of the day, we had a surplus of 641,038. Now, this is another area we want to do the breakdown. I've explained the issue of finance charges, bank charges, and the auditor fee. It has not increased. As you see, it's still 200,000 for the same period. In terms of project expenses, this year we also have to, we painted the fence, and that's why the amount of 70,000 have actually come in. Coming down to the administrative expenses, you will notice that yes, 185, this is a full year, at 15,000 salary, ordinarily, that should give you 180, but at the end of the year, we usually pay like a bonus, and that's why we had that 185,000. In terms of students to teachers welfare, we spent a total of 2.1 million. You will notice that when I was talking about the income, the inflow, we make sure that it's within what actually coming, because we don't dip hand into the association cost. So that is a self-funding event by itself. In terms of DCB, award, these expenses was also because of the movement in the period. It does not relate to 2023 DCB award. It relates to the previous year, but because of the cutoff, the change in accounting year, that's what has made that one to be showing 225 over there. Members welfare, out of the 4 point something that we got, we've actually spent 2.1 million. But the way we have done the account is for the most years that will have been closed. But for our Pote, it's a continuous thing. So the balance we have there is for its upkeep, for a continuous period. Once we look at the account, I'm sure some members also try and put in money so that we're not short of funds over there. Now the next line is AGM, EGM to AGM and election. This relates to last year, the EGM that we have. So we spent about 1.2 million, 1,223,050, and secretariat expenses increased a bit. That's about 195,300 as against 72,920. Muffler is also self-funding. You will notice that there's a muffler income, so the expenses have to be taken from that money that we have. And ICT expenses relate to the website that we have. You need to pay for domain. So that amount is remained to, because domain has to be renewed annually, and that's 69,000 naira 125. And in terms of association deal, SF Koga as a body also belong to Legacy School Association. So we paid an amount of 250,000. Although we don't used to do that in the previous year, but I think it's something that is a new association that have actually come. And for advert and publicity, we spent about 201,076, and that's how we arrived at the 6,799,561 that we actually have in the breakdown of expenses. And that's how we got the total. Yes, 8.3 against 5,473, but I think we've explained how. Let's go to the last page. Last we talk about the 5-year financial summary. You know, the other one we started from 2018, but this one is from 2019. It just shows us how we have actually been faring. Apart from 2022, which was a 10-month, we were experiencing a steady growth in total assets from 3.4 to 4.4 million to 8 million, although a little dip in 2022, but it has started going up again. We ended with 7296, and after that, when you look at also the accumulated fund that we have, from a level of 3.4 million, we are now at 6.8 million. That's at the beginning. But the ending accumulated fund, for in terms of liability, I've explained that if we pay the auditor, we are not going to have that liability again. Total accumulated fund and liability, which is still seen as more than total asset, we've also seen the growth. In terms of income, when you will notice that it looks as if we have so much income in 2019, 2020, and 2021. Now, those are periods that we did a lot of huge projects. And when you look at as we have high income, we also have high expenditure against those periods. Now, because there was less of those activity in 2022 and 2023, you will notice that yes, also our expenses were actually moderate. But in terms of surplus, the only year we have a deficit has been year 2022, which is 1.7. But like I said, going forward, it's going to be surplus that we have. I think on that note, that will be my presentation of the account. I want to give room for questions or clarifications on any area for the 2 years. Thank you.
Any comments? Are there any comments or clarifications being sought? Somebody's hand is up. AG4 Richard.
Unmute him.
Can you unmute yourself, AG4 Richard?
His hand is up.
His hand is up.
Oh, I thought he was.
Oh,
That was the cursor.
Oh, it was the cursor. Okay, sorry. Is there anybody who's...
I don't know whether the auditor have any comments also.
Okay, so please, let's take the auditor's report right now before we take any more comments. This auditor, please. The external auditor.
The external auditor.
The external auditor.
This is the report of the independent auditors, members of St. FINBARRS College, Old Boys Association, SF, COBA. Report on the financial statements. We have audited the accompanying financial statements of St. FINBARRS Old Boys Association, which comprises the financial statements, statement of financial position as at 30th September 2023, and the revenue and expenditure for the year ended 30th September 2023. A summary of significant accounting policies and as set out in page 8, and it goes to the accounts on page 9 and to 11. Opinion. In our opinion, the financial statements give a true and fair view of the state of affairs of the organization's financial position as at 30th September 2023, in accordance with the Financial Reporting Council of Nigeria Act 2011, as the manner required by Secretary and Allied Contract Acts, Nigeria, financial.
When I started changing,
conducted our audits in accordance with international standards in auditing. Those standards require that we comply ethical requirements and plan and perform the audit to obtain reasonable assurance about whether the financial statements are free from material misstatements. An audit involves performing procedures to obtain audit evidence about the amounts of disclosure in the financial statements. The procedures are selected, depend on the auditor's judgments, including the assessment of the risk of material misstatements and the financial statements, whether due to fraud or error. In making those risk assessments, the auditor considers internal control relevant to the entity's preparation and fair presentation of the financial statements in order to design audit procedures that are appropriate in the circumstance but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. An audit includes evaluating the appropriateness of accounting estimates made by the officers, as well as evaluating the overall presentation of the financial statements. We believe that the audit evidence we have obtained is sufficient and appropriate to provide the basis for our opinion. Signed, M.A. Gaga Co. Chartered Accountants. Thank you.
Okay, thank you very much, sir. So the floor is open to members who wish to make comments on the accounts. The financial secretary will be here on hand to entertain whatever contributions or questions you have. So the floor is open. Well,
good afternoon, everyone. My name is Desmond Okoro. Good afternoon, everyone. My name is Desmond Okoro, the SET General Secretary for 98 SETs. I would like to move the motion for the adoption of the financial report as presented at the annual general meeting of 2023.
are there any seconders?
Hi, Kita, Bebuja, Monday of Ojadi of 59 State, and also the General Secretary, second the motion.
Okay. Thank you very much. So a very important aspect of our annual general meeting has been accomplished with the adoption of the financial reports. We would like to thank the auditors, the external auditors, Jaga and Company. We thank you very much for your diligence in which you have approached this assignment. Let me once again say something, and this is an observation. I said in my speech that if we just go by our Facebook membership of our Facebook page, there are over 3,500 members of the Facebook page, meaning that 3,500 people who attended St. FINBARRS College in the past are interested enough to log onto our Facebook page. And as we speak for today's annual general meeting, the qualification to participate in annual general meeting is having paid your dues, annual dues of 5,000 naira, and less than 200 of us actually took the time to pay the annual due of less than of 5,000 naira. However, I would like to commend a particular set that have always been the first to pay the dues of their members. And that is the 1984 set led by Emmanuel Okeke. I believe that's his name. Led by Emmanuel Okeke. They have consistently been the first to pay dues on behalf of their set members. I'd like to encourage all of us to please emulate the 1984 set, and indeed I am informed that they form the bulk of the people who have actually logged on for this annual general meeting. So thank you very much, Emmanuel Okeke. And one of them is a member of our executive, our ex-officio member, Christian Odion. So that shows that we appreciate sets that appreciate the work of the National Secretariat. Thank you very much. We now move on to the very important aspect of today's annual general meeting, which will be what's the word? Ratification, presentation and ratification of an addendum to our constitution. And I would like the legal advisor, Dozier Atueyi, to officiate in this aspect.
Good morning, conquerors, once again. Yes, as stated by our president, we are the next. What has come up is the next agenda for today's meeting, which has to do with the presentation for the purpose of ratification of a proposed addendum to the SF Global Constitution. Now, the proposal was sent to the association by way of in writing, by way of a proposal by Mr. John Folashade Oshibanjo of the 99 set. Now, this proposal was poured following the successful outcome of Father Slattery Memorial Lecture and fundraising ceremony. The proposal was forwarded on the strength of and in accordance with the provision of section 21.0 of St. FINBARRS College Old Boys Association Constitution, and it provides as follows. The said proposal has actually been ascribed some sections, and if carried by the day and ratified, the sections ascribed to it shall be how it shall appear in the constitution of our association. Now, this section, proposed section 15.3 provides that there shall be a body known as the College of Distinguished Conquerors, CDC. The following provision provides, that's 15.3.1, it provides that the body shall be comprised of members who are recipients of the award of Distinguished Conqueror, as well as Distinguished Conquerors and Benefactors Award, except for the honorary awardees. We will recall that at the last amendment of the Constitution, there was provision for honorary awards for distinguished conquerorship status for friends and concerned persons who associate with us. But for the purpose of this proposal, the proposal has been limited to the distinguished conquerors and benefactors who are actually conquerors. Now, the next provision is 15.3.2. It provides that the body shall be chaired by a distinguished conqueror to be elected by the College of Distinguished Conquerors. Now, the following proposed provision, that's 15.3.3, provides the function of this body. It says that the main function of this body will be as follows. A, to organize the annual Father Slattery Memorial Lecture and fundraising event. B, to be the principal body overseeing the management of the endowment fund on behalf of the association. And C, the college shall also act as an advisory, in advisory capacity to the national executive of the association. Concludes what has been read just now, the proposal sent in by Mr. John Folashade Oshibanjo. His proposal has been forwarded to the executive and in line with the provisions of the extant constitution, section 21, has been presented to the AGM for the purpose of deliberation and ratification. The proposed amendment as stated above is hereby presented to the general meeting for deliberation and ratification, subject to being passed by a simple majority of vote of not less than 75% of members present at this general meeting, physically and virtually. We hereby invite comments on this agenda. Thank you.
Elijah, you can please on this.
President,
Very well, sir.
Louder, please.
Please, can you be more audible?
Can you hear me now?
Yes,
Yes, it's better.
It's better.
yes.
My name is Francis. I want to commend the President and the Pastor of the Executive for organizing this meeting and bringing up this proposal. But I have an issue with the name. Which Congo. I look at that name as being, would I say, actually, that name, change, I would suggest that it be changed possibly to body of distinguished Congress or the league of distinguished Congress. Otherwise, every other thing that is in there as proposal, I think I want to endorse and I want to support the proposal that's what we want.
Thank you very much, sir. If I heard you right, you're proposing that rather than using the nomenclature of College of Distinguished Corporals, you would prefer that we consider Body of Distinguished Corporals or League of Distinguished Corporals. Guild. Is it League or Guild, sir? League or Guild? League. Yes. So you are proposing that rather than using the word college, that we substitute that word college with either league or body of distinguished conquerors. Well, that has been proposed and put on the floor. That's the essence of the AGM and this stage of our deliberation. But aside that, every other proposed provision is okay by you, sir.
That is so.
Yeah. Can I come in now, please?
Very well, sir. You may proceed.
Hello, yeah. First and foremost, I want to thank the ESCO for coming up with this great initiative.
Please, sir, can you introduce yourself, sir?
My name is the immediate past president, ESCO. I think okay.
Yes, sir.
I want to thank the current ESCO as led by the president for consideration of this great initiative. It is a logical next step in terms of recognition of conquerors and now putting them to work for us. We've been having distinguished conquerors. Later we introduce distinguished conquerors and benefactors. But that is just in the name. The College of Conquerors will now give them a sort of responsibility. In addition to the recognition we have given them. So they will think about organizing the annual first-lecture lecture, and also think about the need to raise funds, need to execute projects, and need to assist the ESCO in managing contributions from other controls. So it's a great one. And I would also like you to retain college of DCs and DCBs. It's very, very appropriate. So thanks again for this great one, and I fully support it.
Thank you very much, sir. Our immediate past president. Thank you, sir. Any other comments?
Yeah, good afternoon, sir.
Good afternoon, sir. Your name, sir?
Yes, my name is Emmanuel Tom Budova. What I wanted to say, I think the name is just semantic. If we have arrived at college, I think we should return it to. It's just semantic. The main purpose is going to deliver its purpose. That being done, so we should return the name college. Thank you, sir.
Thank you, sir. Further comments? Your name, sir?
Good afternoon, conquerors.
Good afternoon, sir.
My name is Asim Loajuma of 99 Sites. I just want to bring to our attention the matter of the college of DCB. In terms of their function, are they under the administration? Are they under the control of the chairman and of the president? It is something we need to look at very well, so that there won't be conflicts of in terms of decision taking that will end up in trying to make progress. It becomes a bottleneck. So whatever are the administrative tools that needs to be put in place, so that there won't be any conflict between the national expos and the College of Distinguished Conquerors, is that must be looked into as we go ahead in this AGM.
Okay, sir. Sir Shola David, entirely AIG. Your answer.
Yep. Okay. Thank you very much. I just want to let my own little voice also. While appreciating the EXCO and for this initiative of this new body, but I want to disagree with the last maybe 2-3 speakers on the name of the body, name of the new body being set up. What one said there is just a matter of semantics. I don't think so. We need to look at what does the name college entail, and what does the name body entail. So if we talk of college, I mean, to me, in my opinion, does not actually suit what we are trying to set up, because it's just a body or a group of fully recognized people and doing some specific things to do. So I think we need to look at that name again, the college or the body of DCs. Thank you very much.
Okay, sir. Barrister Kingsley, your answer.
still muted.
Hello?
I hear you now.
All right. I would like to thank you all for the job you are doing. My only concern here is on the functions of the body. I want to suggest that we take cognizance of their functions so that there will be no overlap or conflicts between their functions and the functions of the National Working Committee. But by the time we have so many sub-bodies within the members advising the executive, there could be different advices coming in from left and right. I think you should take note of that. You should critically look at these their functions, okay. And I will add that yes, the body is a welcome one. It's a welcome one. Let's look at the names like the last speaker suggested. But it's a welcome one. But let's be mindful of their functions so that we no overlap and there will be no security clash between bodies within the body. That is my candid suggestion, just on the functions of the body. Thank you.
Because I'm yielding the floor to Mr. Desmond to speak to voice his own comment concerning this deliberation.
Okay, good afternoon to fellow jail controllers. Concerning the names, well, concerning the name as being talked about. Okay, concerning the name as being talked about, I don't see any reason concerning the change in the name of college, because looking at the definition of college, it says it's an organized group of professional people with particular aims, duties, and privileges working towards a collective objective, which suits the name of this body that we are forming. But in lieu of that, if we're not comfortable with college, I would also recommend probably we go by fellowship. Since it's a gathering of people, it's also a fellowship of people coming together. That's my 2 cents. Thank you.
Thank you very much, everyone. Any more comments? The floor is open. Well, in the absence of further comments, what we have here so far, the observation and comments made actually stress the following points. The proper words the nomenclature to be used for this body, whether college or body or league or fellowship. That is on one breath. Then the other issue as regards the functions of this body. Let me quickly address that of the function of this body. It is specific. It is clearly provided in the proposed provision, and their function and the specific function are to create a body. No, sorry. The main function are 1, to organize the annual Father Stanley Memorial Lecture and fundraising events. That's the specific function. The other one is to be the principal body overseeing the newly created, to oversee and manage the newly created endowment fund on behalf of the association. Then lastly, it has also given them room to act in advisory capacity. I don't want to assume or believe that that can bring about any conflict, because advice is welcome from every member or every group or subgroup of the association. I don't want to assume that there can be too much advice. It's left for the executive, who are in charge of administration. Yes, in charge of administration. So nobody can take that function from the executive, the function of administration. But however, the executive would always welcome advice, and is left for the ESCO to take in and consider the advice for the purpose of their action. So having said that, we are going to look into the issue of or the business of ratifying this provision. Now, the process of ratification of this proposed provision shall take 2 steps. The first would be to put it to vote whether this proposal should be taken in and ratified to form part of the constitution of St. FINBARRS College Old Boys Association. After we have concluded with that vote, then we will now look at the proper nomenclature to be used for the body. Then we will now put it to vote whether to make use of college, body or league, because going by the comment made by Mr. Desmond, the words are not, none of them are out of place. So, as stated, the vote shall commence with actually considering the substantive provisions for it to form part of the constitution. We shall put that to vote, and I also remind the House that it shall be by simple majority, and for it to be ratified, a vote of not less than 75% of members present at the meeting, physically or virtually, have to be obtained before it can stand ratified and form part of our constitution. When we are done with that, then we'll look at the other issue of the proper nomenclature and also put that to vote. Thank you very much. So can the General Secretary actually assist us in determining the number of participants at this meeting? Virtually there are 41 members attending this meeting virtually. Then physically, there are 12 members present at this meeting physically. So virtually we have 41 members, and physically present are 12 members. So altogether we have 53 members present collectively for the purpose of this election. Now, out of this number, the total numbers, we require not less than 75% votes in support of the proposal for it to be carried and form part of our constitution. So we'll be requiring about 40 members to vote in support of this proposal for it to be carried and ratified and form part of our constitution. So we'll start with the vote of members physically present at the meeting before we proceed with members attending virtually, which shall be by poll, electronic poll. So we'll proceed with vote of members present physically.
All right, so we'll take the vote right now with the members who are physically present. Starting with the General Secretary, Sam Orie. Sam Orie, how do you vote for it? What's your vote?
I vote yes.
For the creation. In support. Dozier Atoy, the legal advisor, what is your vote?
It is a yes for me. I support.
No, we want to take the physical vote first. We'd like to take the physical vote first. So that's Mr.
It's a yes for me too.
Christian.
My name Christian Ojo of 84 said I vote yes for the proposed amendment.
Akintunde Ogufemi 84 cents.
Akintunde Ogufemi 84 cents.
Yes.
Akintunde 98 cents. Yes for me.
Ajayi Tunde 98 cents. Yes. Desmond Okoro 98 cents. Yes.
Malabu Dominic 86 cents. It's a yes for me.
Dominic Malabu 86 cents. Yes.
Simon Sawyer 2004 cents. Yes.
Simon Sawyer 2004 cents. Yes.
Ifeanyi Njoku, second vice president, is a yes for me.
Ifeanyi Njoku DC, second vice president. Yes.
Eshomo Ifoga, national auditor, is a yes from me.
Eshomo Ifoga, national auditor. Yes. Patrick Doyle, national president. Yes. So I believe that those are the 12. We have our IT experts.
Josiah Orie 2000 cents.
Josiah
Orie 2000 cents. Yes.
2000 cents. Yes. So we have taken the votes of the people physically present. We will now have to take the virtual vote, and I believe that that can be taken by the National Secretary. The poll. How are you? How is that going to be? National Secretary.
Okay, we'll be launching a poll now. It will display on your screen. Immediately it displays, please cast your vote. If you are not able to see, just check for the poll icon under more apps on the tab below. I'm launching it now. Please cast your vote. Please vote now. Thirty-two persons have voted.
22 plus 12.
Yes, 32 plus 12, that's 44.
Okay, so it's carried. It's carried.
You already have it there, 78%.
This 100%.
Above. Among those participated.
On the side. 32 or 41 voted.
80% now.
So we already started.
So it's over 70%.
So gentlemen, by virtue of the fact that we have 32 persons who have voted yes online, 34, and added to the 12 persons who are physically present, that tells us that we have well over the what they call that, the requirement of 75%. So therefore, the amendment, the addendum for the inclusion, for the creation of a body of distinguished conquerors has been carried. We shall now move on to the other issue of the name, nomenclature. So for that, the legal secretary, the legal advisor will conduct that.
Thank you very much. Thank you very much. Haven't concluded on okay. You can go ahead, sir. The floor is open.
Yeah, thank you. I will first almost say we're congratulations, but at the same time, I expect Mr. President to tell us those people who voted no, how many votes do we have no, so that we can have any proper perspective.
Sorry, there were no votes, they were abstained. About.
Okay, that's very much. Secondly, before the cast on the name on the website for the summit, I want to take Mr. Desmond back to what he read as definition of a college. He says an organized group of professional people with particular aims, duties, and privileges. For example, the Royal College of Physicians, which shows that it's talking about a particular group of people or are professionals, doctors, lawyers, and whatever. The DCs and the DCBs are not professionals. It's not a professional name, though they are professionals in their own right. So therefore, that name, college, or that college would not, in my own opinion, be appropriate. This group of bodies or the group of people we are trying to bring together. As I said, college designates a group of professionals, doctors, lawyers, would be whatever. But what we have in DCs and DCBs is not, they are professionals in their own right, but the group itself is not a professional group. Thank you very much.
Thank you very much, sir, for that vital contribution. Just a second. Legal officer will respond.
Any further comments to this? We appreciate you, sir, AIG Shola David. We appreciate your observation and guidance. Yes, the regularity of the body that or group of persons who use the word college actually shows that there should be something common amongst this group. Their vocation, has to be common. They are all actually part and parcel and belong to similar vocation. So I don't know if there's any further comment on this, because going by this clarification, it leaves us to just the two words, either body or league. And we actually want to welcome more comments before we proceed to put this particular issue to vote, so that we'll rest everything that has to do with the generality of this proposal and its addition to our constitution. Thank you. Does anyone have any otherwise?
I do not salary of college, and as we engage to our association, it is like welfare organization, social. We are all professionals in our different fields.